Good evening, everyone, and thank you so much for joining our Q2 Lodging Industry Update. This industry update is brought to you by Davonne Reaves of the Vonne Group and Omari Head of Paramount Lodging Advisors. I am Davonne Reaves, your pathway to hotel ownership expert. I have over 14 years of experience in hospitality operations, asset management, hotel development, and feasibility studies. I've managed over $1 billion in hotel assets in top 25 markets or metropolitan statistical areas. I'm also a co-author of the Tidbits for the Emerging Pineapple Professional, which is a guide for aspiring professionals. Also have a commercial real estate fund that focuses on investing in hotels, and I am a proud mother of an 18-month-old son. Omari?
Greetings, my name is Omari Head. I am a director with Paramount Lodging Advisors. I run the DC office for the firm. I've transacted over 140 hotels. We only transact in the hotel space, no other asset class. I also serve as an adjunct professor for Cheney University as well as some other institutions. Proud dad of 2 little girls. Based right here in the Washington, D.C. area, and excited to be with you all here to share this information for Q2 update.
So tonight we're going to go over, believe it or not, new brands came out in Q2 this year during COVID. We're going to give a performance update. We're going to give some information on the pipeline or construction data, jobs, forecasts. We're also going to talk about inclusion or diversity and inclusion, and we're going to leave some time for Q&A. So our objective is to increase the number of Black hotel owners and investors through education and partnership. So as I just mentioned, we want to increase the number of Black hotel owners and investors through education and partnership. We want to do it through education as having webinars such as this to give you a better understanding of what's going on in the industry. And we also have other webinars and master classes where we give you an overview of how you can become a hotel owner. And we do it through partnership by doing collaborative works as far as partnering on deals and group economics. Omar, did you want to talk about the new brands?
Absolutely. So in Q1, we took time to talk about some of the new brands that came out, specifically Everhome with Choice Hotels, which was an extended stay brand. So in Q2, My Place, which is more so in the economy extended stay sector, which has been performing leaps and bounds above the other sectors, announced a new brand by the name of Trend, and they define it as a collection of upper mid-scale and upscale select service and extended stay hotels. So excited to see what this means for the industry as a whole nother brand. Depending on how you feel about that, there are definitely some pros and cons to it, but something to keep your eye on as you look at conversion opportunities for asset acquisition. The next up, we're going to talk about a potential threat for the traditional lodging sector. So everybody's familiar with short-term rentals such as Airbnb and HomeAway. Not a lot of conversation has been given to the partel sector. So 3 names that have kind of been kicked around a lot are flashed up here on the slide: Sonder Domio and Stay Alford, just to name a few. And some important updates here is that Stay Alford actually was a casualty of COVID-19, and they ceased operations in May. So Sonder completed a Series E funding, in June of this year with 170 million. So they're kind of the leader of the pack in this sector, and right behind them is probably Domio, and they completed a significant cap raise in Q4 of 2019. So it's definitely something to keep your eye on. This is important to note because unlike Airbnb, where you're dealing with a private owner and just kind of a technology platform, apartels give you the big company feel, the standardized and amenities standardized and services. You kind of know who to complain to. You're not dealing with a private individual. So, and Sonder actually, right before the economy turned down, started master leasing hotels. So it'll be interesting to see what that looks like moving forward as we continue to go through a recovery. And right now, things that are very popular are the extended stay segment. These are buildings that are actually constructed to be apartments. So what they do is they master lease units inside of apartment buildings, wholesale, and then sell it out retail as a hotel. Brilliant concept. As a lot of restaurants are shut down or have to go options only, a lot of people, but all the grocery stores are open, so people are looking for hotels that have a place where they can cook, not just a microwave, but they're looking for a stove top, maybe even an oven option, so they can go ahead and feed themselves and their families while they're traveling.
Performance metrics. So these next several slides are actually going to talk about the hotel industry and its performance. Unfortunately, it's going to be a lot of negative compared to negative growth. Compared to, actually there's no growth in Q2 compared to Q2 2019. So these numbers that I'm about to share with you are numbers that finish, or Q2 numbers that finish. Occupancy declined by 52.1%, which means that the occupancy ended at 33.5%. Average daily rate, or ADR, declined to almost $84, which means it declined by 37%. And this is compared to Q2 of 2019. Revenue per available room, or RevPAR, which just indicates how healthy the hotel performance is. And it actually declined by almost 70% to $28. So all of this is just an average of US numbers and how Q2 finished in 2020. Again, this chart is more of a visual chart, so that way you can kind of see how Q2 finished compared to previous quarters. 2018, you can see that compared to year-over-year growth, RevPAR increased by 3.3%. And same thing with Q2, it increased by 4%. 2019 with year-over-year growth, it was still growth, but it was just a slight growth. It wasn't as strong as 2018, which as far as RevPAR percentage change. But as you can see, in Q1 and Q2, it was just a deep decline as far as performance, and not a lot, but all of it can be contributed to the negative impact of COVID-19 and how it's just, decimated the travel industry. With Q1 ended at 19.2%. Q2, as I just mentioned, ended at almost 70% decline, and Q2 is the first full fiscal quarter of full COVID results. So Q1, if you remember, COVID came in on the tail end of Q1, so that's why it's not a drastic change compared to Q2. Hotel occupancy, as you can see, it is a huge dip. The lowest point was in April, around the April, end of March area. Areas, you can see just the lowest point as far as for occupancy. If you can remember, there was a lot of travel bans, there was a lot of stay-at-home orders throughout the country. A lot of group travel was canceled. So as you can see, it's just a decline. Now, May, when bans slowly started to lift, travel bans started to lift, people became a little bit more comfortable with traveling. They wore, proper measures as far as masks, and, different brands and airlines, they put out different measures and safety measures, not only to make it safe for the employees, but safe for travelers to travel as well, to prevent the spread of COVID. So it is a slight uptick, if you can see, of occupancy levels. And if you notice in May, with the summer beginning, as well as with Memorial Day weekend. REITs performance. Real estate investment trusts, There are a lot of different hotel REITs, but for the purpose of timing and the purpose of this presentation, we just want to talk about the first four, well, these four on the screen right here. So Asher Hospitality Trust, this particular trust has a lot of independent hotels, has some limited and some select service, and their Q2 RevPAR actually finished at almost $17. They actually reached about 6 forbearance agreements covering 24 hotels, and they have about 116 hotels in their portfolio. Host Hotel, they actually opened 19 out of their 35 hotels in their portfolio, and they finished, Q2 finished with the overall RevPAR of $14.31. Host Hotels has a combination of, limited service hotels, a lot of branded hotels within their portfolio. Park Hotels, mostly big box hotels, a lot of resorts. They actually reported a net loss of $261 million with a RevPAR of $8 or $7.85. ROJ Trust, they have a lot of limited services, a mix, lifestyle, some independents, but mostly limited service hotels in their portfolio, a lot of branded hotels as well. And they had a net loss of $116 million with a RevPAR of $13.56. And Omar, did you want to talk about the brand performance?
Absolutely. So there's a number of different hotel brands. We just wanted to give you a good mix of economy, full service, upper mid-scale, some of the brands that kind of touched on everything. So we'll start out here with Hyatt, Chicago-based company. They noted a net loss of $236 million and system-wide RevPAR of just over $15. Interestingly enough, their pipeline is up 101,000 rooms, or just about 10%. Some of the brands that they're more known for outside of like Hyatt Grand Hyatt are Hyatt Place and Hyatt House, so more so on the select service and extended stay. Wyndham Hotel Group, more so heavily weighted in terms of room count on the economy sector. You're thinking about brands like Days Inn, Howard Johnson, more commonly referred to as Hojo and Baymont. Wyndham Garden Inn, and also the Wyndham core brands, all the way up to luxury like Dolce. But they noted a net loss of $174 million in global RevPAR, just over $17. Now, they noted a 4% decline in rooms in the pipeline year over year. So that's something to keep an eye on as well. Hilton expressed a net loss of $432 million. So we know them for brands such as Hampton Inn, True, Waldorf Astoria, system-wide RevPAR of just over $21. The fascinating part about this is that they have some very notable extended stay brands. So Homewood Suites posted $42 in RevPAR, as well as Home2 $37. So again, as you can tell, the theme here is extended stay is leading the way, where, Homewood specifically is double that of the average of the system-wide RevPAR. Choice Hotels, known for brands such as Cambria, Woodspring Suites, Comfort, Sleep Inn, Quality Inn. They have a good amount of economy product. As you can notice, they suffered the least loss in Q2 of only $2.4 million. System-wide RevPAR of just over $26. Again, kind of focusing in on that extended stay product, but if you look at specifically economy extended stay, which is what Woodspring Suites represents, system-wide occupancy of 69%. Now, overall, they have about just shy of 80,000 keys in the pipeline across multiple brands for Choice. So keeping an eye on these brands. Q3, we'll definitely do some different brands and talk about their net loss or net gain. Hopefully it's net gain, and as well as their different supply in the pipeline and RevPAR across salient brand classes. Construction, the pipeline has been interesting to note as well, down about 1% in U.S. hotel construction year over year. About 313 hotel openings and just shy of 250,000 rooms under construction. Now it'll be interesting to see over the next 12 to 36 months what actually comes into fruition, who actually opens up as a hotel. Is there anybody who pivots and says, you know what, there's a lot of colleges and universities that aren't going back, 100% in the classroom there, or they are reducing their student housing capacity. So hotels may be of use there. Maybe they convert, maybe they exit the system, maybe they postpone them affiliating with the brand, and they have some interesting kind of franchise agreement suspensions in place. There's a lot of things that can happen there with the rooms under construction. Maybe some of these hotels just push it out and say, you know, it is not worth it to open up in the next 9 months, or until we at least have a vaccination and or cure announced. So the construction pipeline, rooms under construction, is going to be a moving target. I would be willing to bet money every 30 days that that number changes. American Hotel Lodging Association did a great survey of about 600 hotel owners, and we pulled out some jewels here. 87% of hotels reported being forced to lay off or furlough staff. So 36% of them have been able to bring back any of their furloughed staff, and just 37 of them have been able to bring back at least half of the full-time employees. So about 24% is back to a minimum of 60% of their pre-COVID staffing. So a lot of people are hurt. They're hurt right now as a hotel owner because we're extremely labor intensive in a lot of different asset classes, through versus a lot of other asset classes, I should say. And then within that, the subsectors, depending on what type of property you run, if you're running a full service, you're very labor intensive. So of the more than 600 hotel respondents, more than half stated that they are in danger of losing their property to foreclosure due to commercial real estate lenders. So about 50% of the people are in trouble, and we'll talk about, you know, what that looks like a little bit later on.
Now, this is more of a visual. And as you can hear, I'm pretty sure you can tell that the hospitality industry or the travel industry has been impacted the most. This is just more of a visual chart, just to see that almost 7.7 million jobs have been lost but due to COVID, and compared to the other industries, and it's just leading by far as far as decline due to the coronavirus outbreak. Now this chart right here, just more of a visual. This is actually created or data is from Hotel Effectiveness. And for folks who do not understand as far as the makeup, as far as the different employees in the hotel, typically housekeeping is the largest department in the hotel. As you can see, it's been actually leading as far as the employee count, and the decline is due to what a decline is in restaurants, sales and marketing, different areas that's more back of the house, or areas that's focused more on group travel or business travel. Those positions have been affected the most. Guest services and housekeeping, housekeeping more than ever, due to, housekeepers needed to clean the room with the extra layers and levels, and more steps involved is just making sure that the hotel rooms are more cleaned and more detailed, as far as just to make sure to prevent any coronavirus outbreak, not only to protect the guests, but also protect the employees as well. Guest services, that includes, the front office, depending on the hotel, the concierge, bellman, anyone that's dealing, just front forward with the guests. Or smaller hotels, they have more of like areas where you can get like a continental breakfast. That's even paused. So hotels have become creative as far as they typically used to offer continental breakfast, or breakfast was included with their rate of room, and they don't offer that. So they do different things. So guest services would help with that. But as far as kitchen, restaurants and sales and marketing, a lot of those positions have either been furloughed or eliminated, because right now the business just isn't there. With the restaurants, a lot of the restaurants are either closing, or they're doing the they're doing the grab and go option, or they're doing to go. So right now it's just not necessarily, feasible or economical to keep restaurants open. Sales and marketing, they're combining a lot of the positions. They're, getting rid of a lot of director of sales and marketing, and, just restructuring and reorganizing. So a lot of people have been in the industry, for 15 plus years, are being laid off or furloughed. It's just restructuring, just to try to save face and just to keep the hotels from closing. This forecast is actually brought to you by CBRE. It's a hotel research company, and the data is from not only CBRE, but STR. So a lot of research companies or hotel research companies that get their data from STR, Smith Travel Research. So as you can see, in 2020, this was actually conducted in May of 2020. So they're projecting that occupancy for 2020 is going to be at 41%, which is a decline to 2019 to 38%. They're forecasting that ADR is going to end at or finish at almost $102, which is a decline of almost 23%. They're forecasting that RevPAR is going to end at $42 or decline at 52%. Supply, they're projecting that it's going to increase by 1.5%, but the demand is going to decline by 37%. Now, they do project that there's going to be an increase as far as the hotel industry coming back in the next several years, meaning 2021, they see an increase or an uptick in occupancy, ADR, and RevPAR. The same for 2020, 2023. We're starting to see, numbers pre-COVID. The numbers starting to come back to the pre-COVID as far as in occupancy levels. ADR not quite there yet as far as getting to pre-COVID levels, but occupancy is just slowly, doing an uptick. This information here is also brought to you by STR. This is just more of a tourism economics forecast and just give you more information of percentage growth with supply. They're mentioning that, it's going to decline by 5.2%, but they're forecasting, growth of over almost 8% for 2021. Same thing with demand. And this is year over year projections. This is, as you can see, no one can project what's going to happen, but they are definitely projecting that the hotel industry won't end positively this year. And these numbers, they do not assume temporary hotel closures as well. Omari, did you want to talk about the default by property type?
Absolutely. So this is provided by TREP. It's estimated, as you can tell, anywhere from Q3 of 2020 all the way into Q4 of 2022, that almost 10% of hotels will trigger some form of default. Now, if you notice, hotels are the blue line here all the way at the top, and just below, well, not just below it, but below it is almost at the 4% mark, retail. So we've heard a lot about various retailers, whether it be Brooks Brothers or a myriad of other legacy retailers going out of business. And retail's been in trouble for quite some time. And COVID has just kind of been the final nail in the coffin for a lot of major retailers. As you can tell, multifamily and industrial seem to be the flattest with the most minimal amount of change predicted. Overall, in second quarter of 2020, major hotel transactions were down 91%, only about 0.6 billion. So that's pretty significant downside. That's almost, if you were to just round it up by tens, you're almost at 100% down. So significant moment right here in history where folks are just kind of sitting on the sidelines and waiting to see what happens. And we'll kind of walk you through some potential next steps of what that might look like. But before we get to that, we're going to touch on something that's very important to note that in the midst of a lot of things, whether it be civil and political unrest, a number of marches and other demonstrations that have happened, as a result of that, people have started to ask all these companies that said, okay, you know, Black Lives Matter, or we value diversity and inclusion, what does that look like? People are asking for the follow-up, or as they say, show the receipts. So we intentionally titled this inclusion and not diversity, because diversity is real. It's been around for a while. It just means that things are different. Inclusion is when you're allowed to participate. So here we're noting 5 companies just recently that have appointed Black people to their corporate board of directors. This is an awesome time. It's great to watch, but as you can tell, there's still an issue with the advancement of Black women. There's only one, which is Chipotle. A shout out to Chipotle for doing that. But you know, Hershey, you know, familiar with Hershey Entertainment, Dine Brands Global, as well as Bloomin' Brands. Bloomin' Brands includes brands such as Carrabba's and Outback Steakhouse. And as you can see, there's only one lodging company thus far that's announced it, and he's actually the current CFO of Sweet Green, which is a QSR that does gourmet salads. Interestingly enough, they've essentially lifted up the couch cushion and found just a massive amount of qualified Black people that people knew were there all along, but we've been told that it's difficult to find, that they're difficult to locate. And if I had to guess, none of them were born in 2019. So they've been around, they've been, you know, surviving and thriving in their industries, and it's good to see them get this recognition. So it'll be interesting to see what happens for the remainder of the lodging industry with other large notable brands that have very public boards, to see, you know, what they end up doing, who they what they end up doing in terms of placing, you know, more inclusive minds on their board of directors. So just want to highlight this. And again, this has all happened within the last 90 days or less. Right now, it's been pretty much acknowledged that we're in a recession, that we're in a downturn. So we want to give you a downturn checklist. So, you know, what should you be doing right now? Number one, be doing your homework. You're watching this webinar, you're learning about this industry. Maybe you've heard about hotel investing, maybe you haven't, maybe you didn't even know that hotels were franchises and what that looks like. So first up, start doing your homework, learn what the key performance indicators are. If there's things that we said that you didn't really know how it all synced up, please reach out to us. We're happy to walk you through that. Start assembling your team. Your team are your individuals who are going to help you get those first few deals done. So you're going to need an asset manager, someone like Davonne, who understands it in and out. They're not just there to help you get into property, but help you thrive and also be profitable in that property. More than likely, you're not interested in being an owner operator. If you are, that's a very different conversation, and we're open to having that too. And we would love to see more of that happen. But most people are approaching this from the investor standpoint, where you want to put in a management company, and the question becomes, who manages the management company? That's going to be your asset manager. You're going to need a broker like myself to help you identify deals, and you know, a myriad of other folks, whether it be management companies or attorneys. And those are all things that we can help you identify. The next thing is going to be review deals right now. Just take a moment and look at places like 10X or some of the other auction websites. You know, get on my list of where I, you know, shoot out various hotels for sale that I have listed. That's going to be important because you're going to figure out what the key performance indicators are, what the verbiage is, what matters to hotel investors. And you can kind of educate yourself on a lot of things very quickly. And finally, and this should almost be number one, which is develop your ownership thesis. Why do you want to own hotels? Why is it that this asset class is interesting to you? Is it because it's sexy? Do you just want the big living room effect where you kind of want something sexy to show off to your friends? Are you looking for depreciation, legacy assets, or is it that you want to make money? And that'll help us steer you towards deals that make sense. and will kind of help open up your mind. The reason why we always say that and why we were very intentional about pointing out certain brands is because a lot of these economy brands that you may not stay in as a guest are highly profitable if you are the owner. So it's different sides of the desk. You're either going to be the consumer checking in, or you're going to be the owner that's responsible for receiving that credit card swipe. And if you're looking at it from receiving a credit card swipe, being the owner side, these economy hotels perform very well. And there's a lot of data that's out there that's showing that even in this economic downturn, they're performing better than luxury hotels. So all things to keep in mind as you're going through the downturn and you're looking to really set up yourself for success in terms of acquiring your first hotel.
Thank you, Omari. Now it's time for Q&A. We left some time for you, so please feel free to leave information in the chat if you have any questions. And if you also want to know how you can get in contact with us, here's our contact information. Omari is very active on Instagram. That is his Instagram name, Hip Hop Hotel Broker. I'm also on Instagram. I'm not as active, but I am working on it. My name on Instagram is at Davonne Reaves. You can also email us as well. Thank you so much for your time. Again, if you have any questions, please feel free to reach out to us. Thank you for those that have been with us since the beginning when we started our first webinar series in May of last year. And for those who are just joining us, thank you. And we look forward to educating you more on becoming hotel owners. Thank you all and have a great night.